Hello, Oracles. Well, we had quite the run last week in Tesla stock. What can we expect this week? This week is going to be a little turbulent, most likely. We've got some very big tech earnings that are coming out, and we have the FOMC meeting coming out on Wednesday also. So, we're going to dive into that and how that could potentially affect Tesla stock over the course of the week, and we'll get to that in just a minute. All right, so looking at the stock to open up the week, we are down about 0.75%. Again, we had a massive run over the last couple of weeks. So going into a turbulent week like the one we're about to go into, it would make sense to cool off just a little bit. We've got the daily RSI over 70, which typically means overbought. Now, again, we've been in the overbought range for up to 2 weeks at a time. So it's not to say that we have to sell off at this point, but being over 70 is typically an indication that we are going to be getting a pullback at some point relatively soon. And now we also do have some massive gaps that have been created recently. So the most recent three are the 114, 122, and 146. So, as we have seen all year last year, all the gaps that were created last year have all been filled. Gaps fill 9 out of 10 times. And I do owe you guys a video going over gaps, and I will get that one out to you guys this week as well to explain it all and give you a fresh outlook as to all the gaps that we see down below and all of the gaps that we see above us. And so what's going on this week, which is really more important as far as, the macro environment is concerned, is going to be we have tech earnings, we have Meta that is coming out on Wednesday, and we have Amazon, Google, and Apple all reporting on Thursday. This is all coming out one day after the FOMC meeting on Wednesday. So it could be a bit of uncertainty for the next 2 days. The FOMC meeting, we are anticipating potentially a 25 basis point hike. Some people think we may be getting a 50 basis point hike. 50 basis points will put the Fed right near that 5.1% interest rate level that they had indicated they wanted to get to. So chances are, if we only get a 25 basis point hike on Wednesday, we will most likely get another 25 basis point hike in March. Unless for some reason we get indications over the February and March information for CPI, PPI, and PCE and the jobs report that kind of let us know that, hey, what the Fed is doing is working faster than anticipated, then maybe we get a pause in March. But seeing as the Fed kind of wants to make sure that the stock market doesn't run away and cause, in turn, further inflation due to the fact that the stock market is running, because of all of that, I have a feeling we may get the 25 and 25 rather than a 50 right now. If we get a 50 right now, it may be a big rug pull and we might get a big pullback in the stock market. So, again, still a lot of unknowns. I still think we're going to get the 25 and 25, but again, I like to play all the different scenarios out in my head as to what could potentially happen. Again, long term for Tesla stock does not matter at all. But for anybody who's looking near term, or for those of you who are like me, who are still little guys looking to add a lot more for these lower prices, and maybe even looking for another bargain deal deep down below where we are right now, I like to take a look at things like this because in the near term, we may get some more amazing buying opportunities to be able to add more shares. For those of you who had a chance to watch it, I put out my new Teslanair video yesterday going over all of my price targets through 2033. And this here, I calculated out how many shares I need to get myself to different levels like 100,000, 250,000, 500,000, and then Teslanair. So for me, looking at that, the more I can buy at these lower levels, the sooner it will be that I can actually become a Teslanair. Because don't forget, as the stock price goes up, your accumulation of shares is going to most likely go down unless your income goes up incrementally along with the stock price. That is how I factored mine in, is trying to increase my income incrementally along with the stock price. Ideally, I would like to have my income exceed that amount, but I want to still be conservative and play at that role. And even in worst case scenario, my income does not increase at all. That's another reason I want to buy more right now. So again, none of that's financial advice. That's just what I'm doing. And, when you're looking at fortunes being born during bear markets, it's because you can buy a lot more for a lot less. So that when we do come out of that bear market, we can actually see even more return on that investment when we bought at those lower prices. So that's the way I'm looking at it. Another thing I thought of too, looking at this roller coaster over my shoulder here, think about what we went through last year. Last year was basically that big drop that nearly every roller coaster starts with. And what happens after that big drop? You have a lot of ups and downs and twists and turns, and then you usually come back to where you started. So, not to say that we are going to come back to where we started this year when it comes to the stock price. My current price target for the end of the year is $207. So, I think we will finish above that. But I don't think we are going to get that big drop this year like we had last year. But I do think we're going to have a lot of ups and downs and twists and turns. And that means a lot of buying opportunities. That also means a great opportunity for anybody swing trading. I've had many conversations with you guys in the comments discussing how, just buying and holding is the best strategy. That is what I'm doing in my main portfolio because I don't want to play the game of having to pay taxes and then maybe missing that turn. And timing the market is very difficult and very risky. But in my IRA, it's a Roth IRA. I don't pay taxes and I can only contribute up to $6,500 per year. So for me, there, the best way to do it is try to swing trade with my Tesla a little bit. Sell a little bit where I think we're near the top and when I think we're going to get a pullback. And then when we do pull back, I can use that money and add more shares. Many of you have given me that suggestion because you have been successful with it. I am now going to be trying that myself and I will share with you guys my results. Last week, I put in a stop for 3% on three shares. Those sold off at 155. I also put in another stop for another three shares at 3% on Friday. We have run since there, so I am still holding on to those. But if we get a 3% pullback, I will be able to take that money and then save it. And then what I'm looking at coming down below is I'm going to put a buy in for $125 for three of those shares to come back. This is just me building up that cash and buying shares for less. It's going to help lower my cost basis, and I will be able to utilize that cash to buy even more shares outside of that $6,500 that I originally had. So it's just kind of a way to get that $6,500 to stretch even further. It's another reason why I have dividend stocks in my Roth IRA, because with those dividends, they're going to keep on adding to that stock, which is then going to continue to multiply and add to that stock. And so for me, with those dividends, that's going to build again beyond that $6,500. So that is not financial advice, but I highly recommend taking a look at your Roth IRA or any tax-free funds that you guys have to find ways to have that money in there, make you even more money on top of what's in there, since you're usually limited to how much you can contribute on the outside yourself. And so now looking at these tech earnings that are coming out, we've got Meta on Wednesday. Meta took a serious beating last year, so let's see how they start off this year with their earnings. I'm not sure where that's going to go. And that's on the day of the FOMC meeting. So sorry, Beta, but it's not going to be an easy day for you, most likely. And then we've got Amazon, Apple, and Google coming out on Thursday. And those are the three big giants also. So when those three come out, it could move the market one way or another. We have seen in the past that tech earnings do move Tesla stock, which is crazy because so many people are saying that Tesla's only a car company, but it's going to trade in sympathy with tech stocks. Hey, I don't make the rules, but all I know is that we recognize what Tesla is for the future as far as technology, software, energy, and AI go. And if the market wants to price Tesla like a car company, I will buy Tesla at car company prices. And then when they finally realize it and it goes to tech company prices, we will all reap those benefits. And the last thing I wanted to jump into today is going to be Project Highland. So if you guys have not seen it, there is a video by Connecting the Dots. I'm going to be putting that link in the description below. I highly recommend this. He ties Project Highland with Highland Park and Ford, and they revolutionized automotive manufacturing. There's a lot of similarities between the two. And so if Elon is just taking not just pages from that book, but literally taking that book and utilizing it for Tesla, we can see something absolutely amazing coming out of Project Highland. It's not just a vehicle, it's much more. I will let Connecting the Dots really dive into that for you guys in detail. But basically, what he goes over is discussing how Tesla and this Generation 3 platform isn't just for a specific vehicle, it is for a specific way of manufacturing. And all of their vehicles will be manufactured in a way that is going to significantly reduce cost by up to potentially 50%. And this here is going to allow those margins to come much higher, and then they can come out with that lower priced vehicle under that $25,000 on top of this platform as well. When Elon talks about Master Plan Part 3 and scaling to extreme size, This is what is needed. Something like this. When you're looking at pushing out the numbers of millions of units that Tesla wants to push out, and they want to do it as quickly as possible, they need to find some way to manufacture at that speed. That, I think, is what we are going to be seeing from Project Highland. And as Connecting the Dots said, thinks that the Model 3, this is just going to be kind of the test for it. So the Model 3 will get the test and say, all right, it works for the Model 3. Let's now roll it out for our new compact vehicle to make it the vehicle for the masses. And then they will inevitably go to the Model Y and all of their other vehicles and use this manufacturing process for them as well. So that is extremely exciting news on that. We should hopefully find out that information on March 1st, Investor Day. And for me, I've been talking to some of you guys wondering, is Investor Day actually going to move the stock price or not? In my eyes, we've seen all these events in the past not do squat for it because Wall Street doesn't understand it. But at the same time, if Tesla's going to come out and explain this whole revolutionizing of manufacturing and the process to cut all of these costs, we might actually see the market be shocked and take off from there. So it could either be a dud or we can completely take off. Truly don't know what we are going to see on Investor Day, but I know a lot of people are going down there. I unfortunately will not be able to make it, but very exciting stuff that we could potentially be seeing coming out of this. So, again, going to this roller coaster ride of a year, with all of the ups and downs we may see this year, just remember to pay attention to the fundamentals. Because if this is something that Tesla is going to announce and the market does not react positively to it, you can bet your butt this is going to be an outstanding buying opportunity to get in because Tesla is about to do something that hasn't been done in over 100 years. And back when that happened, it revolutionized the industry and Ford took off. So, just saying, this is what I'm going to be paying attention to. This is why I'm going to be buying as heavily as I can this year. And I truly and genuinely think that this year, whatever the lowest prices we see of the year are going to be the lowest prices we ever see again. Now, again, that's just my opinion. I cannot see the future, but based upon what we've gone through over the last 2 years, based upon what I have learned, and yes, I have learned a lot over the last year, and I hope you guys have as well. But based upon all of that knowledge, I do foresee, unless we get into a deeper, longer recession, I think this year is going to be the lowest prices we ever see in Tesla stock again. I just don't know where those lows are going to be. And this is also why I want to buy as much as I can during this year. So thank you guys all so much for watching. Let me know your thoughts in the comments below as to what you think we're going to get from the FOMC meeting, whether it be a 25 basis point hike, a 50 basis point hike, or something else. Otherwise, thank you all for your support. Don't forget to hit that like and subscribe button, and we will see you in the next one.